Okay, we should be live. And we're going to wait till some people get in, and then we're going to start. Going to see how many people actually show up to this. This is the first time I've done a stock market close. I'm super excited to do the market close, but I've never done so. So it will be exciting to kind of see how we do it. And goal is to do this pretty much every day. That's the goal. Ahad, what's up, man? I think you're the first one here. Thank you so much for being here. Appreciate it. Cameron, Simon, what's up? What's up? Oh, wow, 14 people. Did not expect that. Thank you guys so much for being here. I love it. Thank you so much. This is our first stock market close, everybody. Wow, caught your first close before I start work. First close. Thank you, Quarantine Quartet, for being here. We are green, ladies and gentlemen. We are green. Oh, boy. This person's here. Goodness. No, I'm just kidding. What's up, Kelly? Yeah, so I'm starting stock market closes. I'm excited for it. Excited to be done. Right here is what's going on, ladies and gentlemen. This thing right here, we are green, green, green. I did not expect for us to be this green, to be honest. It's quite shocking to me throughout the day. It's good that I didn't buy as much as I bought in the morning because it's not a good day to buy, to be honest, because everything is ridiculous right now. So let me share my screen right here. And let's end out and see how the market is performing. So S&P rallied. Where we go? 409. Where are we at on the S&P? We are at 410. Unbelievable to me that we went from 430 down to 390. We almost beat 390, and I thought we were going to beat it and head to. I thought we were going down to zero, to be honest. I thought it was going to be bad. And then we're just right back up. Apple was down to like 158 or something. Apple's rallying up 5% on the day. Apple up 5% matters. Like Apple up 5%. The amount of Apple is 7.5% of the S&P. Its market cap is equivalent to the bottom 180 companies in the S&P 500. So for Apple to move up, especially with the shares outstanding they have, which is 16.07 billion, a lot of activity has to happen on Apple on the upside in order for their shares to actually matter when it comes to moving. Palantir also up at $8 and doing pretty well. Palantir was stuck at around $7 for the past month, I would say, or past like 3 weeks. Got to a low of about 720. I bought a little bit. I know Kelly bought like 100 shares at 720. Palantir's up at $8. Palantir's up at $8, which is also pretty nice as well. So what's going on right now, and I think one of the key things that the market is indicating, this is what I said in the market open as well, is the nature of how inflation's actually being adjusted for. Tomorrow's the print, right? So tomorrow's a big day. And if the print comes out lower than 8.5, and like substantially lower, right? Like not just 8.1, but let's say we get into the 7.9, 7.8, and we went from 9.1 to 8.5. So we went down 6 basis points. If we go down even further, there is a very, very strong possibility that the market builds on top of this momentum. The question is it fake or is it not fake? Now, inflation going down, one could argue, well, it's absolutely not fake, right? Because if inflation is going down, inflation is going down. The question becomes, is inflation actually going down or is it just kind of sticking around? And I think that's what we're ultimately going to have to see with where the market's going. Quarantine Quartet comment, did you watch Echo's live stream with Tom Nash? Some niche drama happening on YouTube. Yes, I'm friends with Tom, so I kind of know all about that drama. It was a good live stream. You know, Tom was able to sell his case, resolve his stuff. I think Tom's exhausted. Me and Tom were supposed to do our podcast today. Can you learn to speak, my guy? And he ended up just going to bed. I think he's emotionally exhausted from a lot of the stuff that's been going on. So it is what it is. And, people got to do what they got to do, I guess, to expose other people and get their views. But it is what it is. Hopefully that stuff just stops on YouTube because it's kind of annoying. SoFi. So SoFi is a stock that I purchased today. I bought 77 shares. We'll be putting in another $500 soon. $1,000 position, very small position. I uploaded a video a little bit earlier today explaining why I'm choosing to make this investment. SoFi to me is a very simple asymmetric bet, given their growth rate and given their upside potential. And it's hard to bet against it necessarily. Like when I look at SoFi at this valuation, I'm like, could it go lower? Of course. It got to 428 at one point, or 482 was its 52-week low. But is it something that you want to bet on in the face of a lot of these other stocks? Yes. Like a 10x on SoFi versus a 10x on Google, I just think a 10x on SoFi is more likely, or even a 2x or 3x on SoFi versus a 3x on Google, right? Google's like a 1.1 trillion or something. Like for them to go to 3-4 trillion, that's a lot. For SoFi to go from 5 billion to 15 billion, I think that's very possible, right? And after learning more about the company, after learning more about Galileo, Technesis, their kind of suite of products that they offer, it seemed like a very obvious asymmetrical bet to be able to go for SoFi. So that is the next part of my portfolio that has been introduced and has been a part of my investment strategy. Broncos fan, my man Amit, how was your weekend? My weekend was great, Broncos fan. I hope your weekend was good as well. I don't know if the Broncos played, if they won or lost. I'm not a football guy, to be honest. I never got into football. It's just not I don't watch any sports now, to be honest. I was into basketball, but I don't watch basketball anymore either. So it's a timing thing to sit down and watch the whole game. But Super Bowl, I'm there. Super Bowl, I'm there, and I'm excited to watch Super Bowl. All right, let's. We have about 12 minutes till closing bell, so let's pull up some stuff going on CNBC. I want to hear a couple of clips about inflation and what we are looking at when it comes to inflation, and then we'll keep going from there. So here's what I want to go. The market will have a powerful rally if CPI shows weakening inflation. If that happens, then we're in a good spot. Here we go.
About tomorrow, I guess. It is. At this point, it's about CPI. And I think we priced in, for sure, a much better reading. Now, I think for the market to kind of extend gains, you're going to need to see something below 8%. Estimates are calling for somewhere around 8.1. Let's see something below 8 to get really excited. And let's see what the core measures as well, too. The core excluding food and energy, that's going to be important. If this move, Farmer Jim, is all riding on tomorrow, I know you're going to be sweating bullets. You're going to be sweating bullets when that number comes out because you need it to be good for your thesis to work.
Yeah, you're absolutely right. And Joe's right as well. I mean, another way to phrase this is if it's bad, if it's above expectations, we got a problem. However, having said that, I am looking at gasoline futures. I've been talking to you about that for a long time. Freight costs, inventory to sales ratios. There's a lot of reasons to think that it might come in light. Now, I also want to acknowledge that rent is a problem, and the Fed wants to see some signs of cracking in the labor market, which it just hasn't. So what you come down to is, yes, it's just one data point, and the Fed wants more than one data point. But it's a pretty important data point to get right. And if it goes wrong, Houston, we've got a problem.
Unless you figure, Weiss, that even a good report doesn't necessarily change all that much in the big picture. Yes, okay, we hope it's coming down, but it's still way elevated above where the Fed needs it to be. The Fed's going to keep interest rates higher for longer as a result of that. So what in the big picture does it really change?
In the big picture, at the end of the road, it changes absolutely nothing. In terms of what it does on a short-term trading basis, well, I think the market will have a pretty powerful rally if the number is a weak number, meaning showing inflation coming down. Because the market has just shown this incredible appetite for taking on risk, despite what the Fed governors have said. So when you actually have some evidence that, and it's not necessarily prolonged evidence, it's just that this one data report is working in the bull's favor, you'll see the market take off. Plus, you also have an absence of news. So companies aren't going to come out and lower numbers this early in the quarter. So I think the market take off nicely. On the other hand, given what's happened over the last week, if it's a strong number, bad inflation number, you'll see the market give up the 10% and put on. So it really is a binary event tomorrow.
Yeah. No, that sounds right. Amy, is that how you see it too? If you're coming off, we are coming off a good week in which Mark Newton of Fundstrat, who we cite quite often, points out the breadth was far more broad-based than many may realize. He thinks the rally likely gets to 41.25 to 41.50 at a minimum, he says. Can't rule out an even larger push higher if CPI shows weakening headline inflation on falling gas prices. You do have Tom Lee, and he's been putting out expectations, too, that inflation is going to drop like a rock, and it already is.
Right. Well, I mean, I think Steve's exactly right. It's a binary event tomorrow. The market will move on it. I also think it's ridiculous in some ways that we're spending so much time focused on a number that's a lagging indicator to determine what the Fed policy is going to do, which works with the 12 to 18-month lag. So I do think there's a lot of mismanagement here in terms of what's going on and what the market's looking at, or misanalysis, wrong analysis, I guess I would say. But it is what it is, and the market's going to move on this number. 41.25 is, I think, 30 points from here. It's nothing. I think, yes, the market could easily get there, sure. But I really think we have to focus on what the Fed funds rate is, but we also have to focus on what the neutral rate is. And I think what we're learning is that the neutral rate is higher than anyone thought.
So that's very interesting. Okay, first of all, Felicia, thank you for being here. Damien, thank you for being here. Blue Chair says inflation isn't real. Blue Chairs, I think you are fundamentally wrong about that assumption about inflation not being real. But anyway, this is really, she almost said misinformation. D348, thank you for being here. So this is still at work, day 13, but I really appreciate you turning this on, even though you're at work. It means the world to me. This is the interesting part about inflation, okay? And she said it's almost a given, right? 409 to 412, that's up 30 on the S&P. That's very likely if CPI comes in later. Her argument is, though, is that it's such a lagging indicator given the data that comes in to be able to create a CPI print, which is about 12 to 18 months of lagging indicator for what the Fed will have to do. So it's like, does it really matter? Now, obviously, from a market's perspective, just pure like the tech, yeah, it matters because we need to understand if that's going to happen or not. But in the grand scheme of things, is it an indicator for the economy? I don't know. This is the scary part here of just like, for example, let's say you want to buy. Let's say it's time to buy, right? S&P is at 410. You're like, all right, we're having a decent rally. We went up from 390. I missed out on 390. I'm going to buy at 410, and I'm going to ride it up to the top. And even if inflation goes down and you look like you're right for a week, the core fundamentals around the actual economy are those changing. Now, inflation is one indicator. It is not every indicator. What do I mean by this? Well, let's go to this article that came out recently. CNBC is reporting Goldman Sachs is kicking off a bunch of Wall Street employees, or they're starting Wall Street layoff season, cutting hundreds of jobs this month. Goldman Sachs is planning on cutting several hundred jobs this month, making it the first major Wall Street firm to rein in expenses amid a collapse in deal volumes. This has been happening in the tech space for the past couple months now. Facebook hiring freezes, Google, Snapchat laying off people. Now, because of collapses in deal volumes, in order to get a deal done, you need employees. If you don't have deals, you don't need the employees, which means you fire the employees. In the financial services sector, the bank is reinstating a traditional of annual employee COLAs, which have historically targeted between 1% and 5% of lower performers in positions across the firm, meaning they're getting rid of non-adequate employees. At the lower end of that range, which is the size of the expected COLA, that means several hundred job cuts at the New York-based investment bank with 47,000 employees at mid-year. So these types of things are super important to understand in the context of what's going on with the market, right? Because if inflation is actually going lower and the market decides to rebound, but in the real parts of the economy, companies aren't. And this is sort of, so this is the PE stuff that Jeremy Grantham is talking about. And not just to quote him, but the PE of the market should be 15. And right now we're at 20 of the price to earnings. And his argument was the way we get to a lower price is if earnings start to collapse, meaning corporate profits go down and the market recognizes, oh, shoot, Goldman Sachs is not making as much as we thought. Even if inflation is going down, like, why would we invest in Goldman Sachs right now? It's not the right time to buy, which will lead to the market to decline. Now, if that's not going to happen, if the market's going to be okay, if Facebook's going to be able to put up 30 billion bucks, Apple's going to be able to put up 90 billion bucks, and they're going to able to weather through the storm, it is going to be a softer landing. We're not going to have the issues that we're having currently with inflation as it starts to drop like a rock, as that last analyst just said. And we might be on our very way to going to 500 on the S&P and having a really good life. The problem is, I think a lot of people, Mohammed El here in particular, he's one of the sort of the best analysts that I really respect. We haven't had a real crash. Like 360 on the S&P was not the actual crash. And so we're going to see. We're going to see if that actually happens. Amber and James Williams, I'm so glad you are doing these market closes. Thank you so much, Amber and James Williams. Appreciate you being here. It means the world to me. I took a few NEO puts after the rally today. Yeah, let's check on NEO. NEO did pretty well today. I'm here while getting an oil change. What's up, Richard? Thank you for being here, man. It means the world. This is my first market close, by the way. So if you guys have any suggestions of different things to do in these market closes, let me know. I kind of do them the way I do my market open. I do it about 15 minutes before the market opens or closes, talk about what's going on in the news, analyze different things that are happening, analyze in particular what's going on the day-to-day from a geopolitical, macroeconomic, and sociological perspective, and then try to give my own analysis on what's going on and some of the moves that I'm making as well. So NEO up 13% on the day. I don't think it's the worst time to buy some puts on it, to be honest. A lot of this stuff is like, I don't know if this is going to happen. Midwest Cannabis, thank you for being here. Appreciate you as well. Who are SoFi's competitors? It's a good question. SoFi, what I found out a couple of days ago, and this is what really made me bullish on them, the AWS of fintech sort of bull thesis that they have in the Galileo acquisition they made a while back. Galileo, that operating system from a financial technology perspective, is actually powering most of their competitors like Robinhood. And I'll do more videos on this in the future. But when your competitor uses your ecosystem, your tech to build their entire company, I mean, why would you buy Robinhood over SoFi? Like, it just doesn't make sense. SoFi is a platform. Robinhood is a place where they make money off payment for order flow. Now, SoFi makes money off payment for order flow, but payment for order flow is a very small part of their business, whereas Robinhood is the only part of their business. Again, SoFi makes most of their money on lending, and the bull case is that they're going to be licensing out their Galileo technology, and that's going to really be where the run happens, if that is able to happen. And so, you know, they obviously have a lot of competitors in the fintech space. The traditional banks are pseudo competitors, even though they're not really competitors. But they're not. There is no other person creating an AWS of fintech. And I hate to keep saying that because I know it's very cliche, but there's no one else really doing that. Quarantine Quartet says, I'm making butternut squash soup with you. I love it. I'm happy to be part of the butternut squash soup. Okay, so I don't have my bell with me, but I will bring my bell because at 4 o'clock when the market closes, we need to ring the bell, right? We got to do something to celebrate the market closing. So I think that's what I'm gonna be doing. I can't say wake your ass up because, or maybe I can because maybe people aren't awake. That's what I do in the market open. Maybe people are not awake even in the middle of the day, and they should be because it's important. All right, how many? We are 4 seconds away, 3 seconds away, 2 seconds away. Boom! The market has officially closed unless you trade in the aftermarket. Tristan, I heard you clapping. My videographer in the back started clapping. He thought that was funny. Can you summarize the Echoes, Tom, and Scott thing? I can if people really care about it. If you guys don't care about it, I won't do that. Can you can say take your ass to bed? Yo, if you sleep at 4 p.m., you are a grandpa, bro. You cannot be sleeping at 4 p.m. You need a closing bell noise. All right, we're gonna get a closing bell. Tesla, if you're looking at it on the screen, $304. I bought my one share at $294, so I am up significantly on my position. Okay. Tesla was just at 269 a couple days. This is the weird part about the market, bro. This is the weird part about 2022. Tesla was at 269 a week ago, and everyone, including myself, was like, this shit's going to, this is not good. And then boom, just right back up. No problem. Elon Musk tweeted that commodities or that deflation is coming, meaning he's seeing in his supply chains that commodities are probably going down, which is good because inflation going down means interest rates don't have to be that high, which is good for tech companies like Tesla. So there might be a world in which everything moons, but there might be a world in which it doesn't. We have to see. Did you take a look at is Nubank public? They are, right? They definitely are. Hold on, let me look up their ticker symbol. I believe they're public. I've heard about Nubank. I know they mainly operate in Latin America. Nubank stock. Here we go. $5.83. What is their ticker symbol? NU. Okay, NU. Let's look this up. NU. Okay, what's their market? 5 billion shares outstanding, $5 market cap. No. Market cap is 25 billion. Oh, wow. $5 a share in a $25 billion market cap. Very interesting. What's their price to sales? 14. Nubank looks a little expensive, bro. Wow. I know their growth rate is insane. I understand that. I know they're growing like crazy. But it's a little pricey. Goodness. And and there's 4 billion shares outstanding. Isn't that more than Palantir? Or no, that's not more than Palantir. Palantir just has maybe. Wow. Yeah, Nubank's interesting. I have not seen this one in a while. This is very interesting. I think Kathy holds Nubank. Mainly Brazil. Yes. Damn, I wanted some under 300. Yeah, I got a little bit under 300, but Tesla might just get back there. So stocks close higher for the fourth straight session ahead of key inflation report. And seems like that's going to happen. I admit you have an opinion on Path. I like Path. I do not know about them as deeply as obviously Kathy Wood knows. I know I have some friends who worked at Path that were there when the stock price collapsed because it did collapse. Now, if you look at the RSIs, it is under 30. So one could argue that it is massively undervalued. But I think it collapsed from 30 to 60 at one point over the past couple months, and that's where the stock really collapsed. I don't have a crazy opinion on them. I can say that it does feel like they are relatively undervalued, but again, this is coming from someone who doesn't fully understand or get everything they're doing. Just given where the market has taken them over the past couple months, you can make that case. But I would like to learn more about them. Are you going to do videos on DNA? Yes, I'm going to be initiating my position probably next week. And so DNA will be a stock that I talk about. Now, I'm not going to have a super large position. Synthetic biology is something I'm getting more interested in. Let's go to DNA right now, actually. AMRS. So DNA is at 3.17, up 7% on the day. AMRS is their competitor in the synthetic biology space. And I'm trying to research and understand both of them very well. DNA obviously has the Kathy Wood associated with it. The Kathy Wood, she's has more than 100 million shares. It's quite insane. But I'm trying to understand more about the company. I'm trying to understand more about synthetic biology and genome sequencing because that stuff is interesting and it's an asymmetric bet. Like a lot of the companies I like investing in, including Palantir and SoFi. And Ginkgo Bioworks is a platform company as well. Now, there is a massive short report on it that I have not read yet. I want to read that. I think that's by Iceberg Research or something. So I want to go through that. I want to talk about that in my videos as well. So going a little bit more about that is important. Chris says he has UiPath. It's a good tool, but Win automation is better. Chris said, when did you get Path? You must have had them for a while then. I didn't know you had Path. Chris, why do you not like DNA? Shyam Sankar's on the board of directors. Well, Chris doesn't like Palantir either, so Shyam Sankar is not he's not the compelling guy. So that's what it is. Samarth, no worries, man. Hope you're doing well. Samarth wanted to write some articles for Daily Palantir. No problem, man. Can't wait for the DNA videos. Yeah, I'm excited for it, man. DNA is one of those stocks that's interesting. Again, I have not read the short report yet, so I'm trying to understand more about it. But it's an interesting company. It's a very interesting company. The one interview I did on it made me excited about, especially at this valuation. Again, it's like some of these stocks, you're looking at them and you're just like, I might get really, really wealthy off some of this shit. Like, I think I look at SoFi and I'm like, I'm gonna fucking make some money here, And Palantir, I can't say that because I'm bag holding on Palantir, and so I'm looking for opportunities now that make me excited that I can tell myself I have a reasonable chance of making a decent amount of money here because I'm getting it. Like SoFi, people got in at SoFi at 15, 16, 17 bucks. That sucks. Palantir, I was getting in 22, 23. But I don't have that same relationship with SoFi. That's just one of the stocks that I never understood. And as a result of that ignorance, I was able to wait until it hopefully reached the bottom. I think it still has a little bit more lower to go if things get bad. That's what I was able to see. And so same thing for some of these other companies. Invitae, anyone? I need to learn more about Invitae. I really don't know that much about it, but I want to learn more about Invitae. My Palantir average is under 9. Yeah, that's phenomenal. I mean, I'm at 19 on that guy. So I bought a lot of it, a good 15 grand when it dipped to 12 and 11 on the earnings in Q1. And that's what I thought was the dip. That was not the case, unfortunately. So we will see. We will see. All right, let's wrap up. Let's see a video on CNBC. Let's see what the talking heads are speaking about. Keep going from there. Shout out to 103 people being here. Really appreciate you guys. Please check out the link in the description for my startup, audia.io/register. It's free to sign up. Would love your feedback. It's growing pretty nicely. getting a lot more people to check it out. So I would deeply, deeply appreciate if you check it out. We're trying to build a YouTube of audio. We raised about $300,000 of funding for it and really trying to expand now. So if you guys could sign up, check it out, give me your feedback, give me your thoughts, check out the app, see what it feels like. That would mean the world to me. Let's see Uber CEO talking. Uber is a stock. Hold on. Let me look at Uber stock right now really quickly. Uber CEO just did an interview. This is nice. Uber's at $32. Market cap on Uber is $64 billion. So for Uber to become a $100 billion company, they've got to get closer to 50, 60 bucks. So let's listen to the Uber CEO speak about what he thinks is going on from an inflationary environment.
Brian, thank you very much. And Dara, I'm thrilled that you could join us. Thanks for making the time.
Thank you for having me.
It was about 4 months ago. You sent this internal email to all of your employees talking about what you called a seismic market shift. You wanted to put a greater emphasis on profitability. What steps did you take back then that have put you in the position you are today? You were just on stage saying that you haven't really felt these recessionary impacts so far.
Well, I think it's important to know that even before I sent the memo, we had a real focus in terms of efficiency, cost, getting to profitability, getting to free cash flow profitability. And so the company was already tuned in the right way. We were much stricter about headcount growth. We were looking at marketing efficiency, where to pull back marketing efficiency, where to lean in it as well. And the business was really executing well. But what I saw was that even though we were executing well, the market was changing, and it was changing so fast, and good was no longer good enough. You had to do great in terms of both top line growth and bottom line growth. And for us, Uber, it's an incredible rally culture. I needed the company united, focused on driving profitability as well. We did just that. And what you're seeing now is in the last quarter, we talked about 7% of gross bookings showing up in terms of EBITDA. We actually delivered 12%. So while our target was 7, we delivered 12%, and that was the theme, which is good enough isn't good enough in this marketplace. You know, interest rates are increasing. You're swimming upstream. You just have to go harder, and we're in a great position to do so.
And you know, on Tech Check, we talk a lot about demand, right? And against this tougher economic backdrop, you guys are actually seeing demand continue. The momentum continues. What about on the inflation front, though? Consumers have sometimes noted that prices have become expensive, especially compared to pre-pandemic. Do you anticipate them ever getting to the level they were years ago, pre-pandemic? Sort of how customers maybe knew Uber at the beginning?
So I think on the demand front, first of all, you're absolutely right, which is demand could be getting weaker. But for us, what we're seeing is we're seeing this secular shift from demand for retail, you know, Target, Walmart, some of the other retailers talked about some weakness, shift to demand for services. We're at a big conference now. Everyone's in person. The U.S. Open, you know, was record in terms of people going to that U.S. Open. So more and more people are going out, spending on services, going out in the real world, and that's been a real take.
That's a good point he's making, right? So he's like, okay, demand is going down for retail companies like Target, Walmart. They've said they have more inventory. People aren't buying stuff off the shelves as much, and Target stock price collapsed, went from like 250 to 160. Walmart went down 10% in a day for the first time ever. Walmart is such a stable company. You don't ever expect them to go down that much, but their earnings showed that their inventory is low. What Dara, the CEO of Uber, is saying, well, services demand is not going down. The US Open, one of the biggest tennis events in the world, just happened. The Recode conference where Tim Cook and all these tech moguls were speaking at. There is a lot of demand for things like Uber and things like Airbnb when you have all these things happening in the actual economy. So from a services perspective, that is a really good point that demand is picking up, or, you know, as the country opens up, that's just inevitably going to happen.
Tailwind for us. In terms of inflation, you know, I think inflation, it's everywhere. So it's the price of a car, price of gas, thank God it's getting a little bit better, your groceries, et cetera. We're just a part of that basket in terms of spend. So we're not seeing spend move up or down. We're not seeing any signs of weaknesses one way or the other. If anything, 72% of drivers in the US are saying that one of the considerations of their signing up to drive on Uber was actually inflation. Life is getting more expensive. They need to pay extra for their groceries. So on the supply side, we may be actually benefiting from the inflationary environment.
I want to dig into the financials a little bit because, as you said, you've always put the emphasis on profitability. We used to sit here and talk about adjusted EBITDA. Now we're talking free cash flow. You delivered positive free cash flow last quarter. However, when you look through the results, stock-based compensation was actually greater than free cash flow. Stock-based compensation, $470 million versus free cash flow of $382 million. Now, critics of this metric, like of Dan Loeb and others, they argue that if you're not offsetting that stock-based compensation with share repurchases, you're actually destroying wealth. How would you respond to that?
So I think the first order bit for us is to have free cash flow that's higher than stock-based compensation. And I think that we're well on that course. Absolutely. Like 100% we're going to get there.
Okay, very cool. So Uber CEO, very excited about what's going on with the company. Uber is an interesting pick. I know Chris likes Uber. If they can live up to this whole dream of being much more than just a travel company or like a transportation company, but like really control logistics, shipping, all this type of stuff via their tech and infrastructure, then obviously there's a bull case to be made about Uber. The macro just sucks right now, so the market's not going to treat it too well. DRK, thank you for being here. Tesla's on fire today, but I'm still cautious about this market. I agree. I am personally still more cautious about this market, but it's nice seeing it on a green day. Tom Lee called 4,800 by the end of the year. Thoughts, Amit? Look, I think it's possible, but I also think it's not. I mean, it's just so it's infuriating to try to reconcile. It's like you just want to wait till the end of the year and see what happens, because it's like on one level I don't think we've had a real crash. 360 on the S&P is just not it's not anything really. It's just not. But 480 ending 2022 where we started in 2022 makes zero sense. Like it just, unless we solved all of our problems with amazing amounts of fiscal and monetary policy in these 12 months, which just doesn't happen usually. You usually have a bear market for like 10 months. And you could say what we've had in 2022 is not really a bear market. We were down on the NASDAQ and the S&P 360 and I think under 10,000 for like a week. But one could argue if inflation goes down, there's no reason to have a recession, right? Like there's actually nothing going on. All the speculative bubbles, the NFTs, the cryptos, they've all popped, right? All the liquidity that was in the market, the Fed is quantitative tightening by $90 billion a month. All of that is going away. All that money's leaving the economies or the stock market. So at that point, you could make an argument that if we stabilize, I don't know if we have a massive bull run, but we at least don't go to new lows. And then Michael Burry will be wrong again for claiming that it's going to get worse, and Jeremy Grantham. But we're going to see what happens. We are going to see what happens. CPI going to be way lower than most are expecting. I agree. And we would rally hard tomorrow. Yeah, if that happens, it's going to be a nice day. It's going to be a green day, and it's going to be fun to see what's going on. Housing down, gas prices down, Walmart full of inventory. Yeah, and that's the housing collapse is one thing that could lead to, even if inflation goes away, that's not necessarily something that really we need to, that's not an indicator that would make everything go peachy clean. Chris, so Cam, I'm expecting a 75 points rate hike for sure. Like, Jay Powell did not say, hey, there's going to be pain to not raise it by 75 bips. That I really, because again, this is something that even Tom talked about when Jay Powell gave his speech. It's like, let's say inflation goes down to 7.3%, being super generous here. We cannot get complacent. Like getting complacent and risking the potential for, we have to go Paul Volcker in the 80s or sorry, the 70s, I forgot which decade it was, just to get out of this. We are not in the clear at 7% inflation. That is not a good thing, which means I think the Fed should be a little bit more conservative. And then when we get down to 6 and 5, we can start talking about not doing 75. But I don't know. It's just so, you just don't know what's going to happen. It's so unexpected. Deflation is coming. Kathy will pop most in 6 months. Thoughts on Elon Musk saying there's a deflation risk if the Fed raises rates too aggressively? Elon, I talked about this in the morning open. He's looking at a lot of data on supply chains, right? Because he manages Tesla. And so if he sees commodity prices are going down and their supply chains and things are getting better, that means there's a risk of deflation. Now, obviously, Elon Musk does not want interest rates to be super high because that hurts tech companies. So there's a little bit of an incentive there. But nonetheless, if he's looking at real data that says that commodities are going down, then it's hard to imagine that commodities are not going down, especially if inflation starts to go down month over month, which means there's a real risk of deflation if the Fed keeps interest rates this high. I just think we have to be a bit more conservative about it, which means 75 bips in September seems reasonable. So Fed did not invoke that name by accident. Yeah, it's a good take, DRK. It's not a bad take. Supply-driven inflation can't be cured by demand destruction. That is a good point. I agree. That's actually a really good point, because if you destroy demand and there's more, I mean, that's not necessarily going to solve it. And this is why things are going to get really interesting. And also, there's geopolitical stuff going on. I mean, there's China, Taiwan stuff. I did a podcast with Code Strap and Chris the other day, and Code Strap is very adamant that there's other stuff going. I mean, if China invades Taiwan and our entire supply chains just are destroyed overnight. Like, Apple can't be making their iPhones for 5 cents an hour in China anymore if that happens. So, I mean, we're gonna have to see. A lot of stuff is still yet to be proven. So we'll see what happens. All right, I think that's it for me, everybody. Thank you so much for being here on my first market close. Appreciate it, all 100 of you being here. This will be daily around 3:45 to around 4:20. And we're going to be doing it every day. Live streaming around 9:20 to 10 a.m. So 40 minutes in the morning, about 40 minutes in the afternoon. And late night stock talks today is going to be at 11 p.m. So we're going for 3 streams every day. So thank you guys so much for being here. I appreciate it very much. I will see you all tonight, 11 p.m., whoever can make the late night stock stream. We basically talk about stocks, but we also talk about like everything else. And conversations go kind of crazy there. So thank you, everybody. I will see you then. Bye-bye.